It is 9:40 a.m. Pacific Standard Time. It is the first day of December 2025. This is the last month of the year, and this is episode 1220 of Bitcoin and the yen carry trade reaches out and bitch slaps us again. If you want to know what the hell's going on, chances are real good it's the yen carry trade coming back to haunt us. And if you remember, not last summer, but the summer before, the yen carry trade reached out and bitch slapped us across the Pacific again. So it's happening. That's what this particular dip is about, the yen carry trade. We're going to get into it a little bit more. Then we're going to run down south to El Salvador, where we're going to talk about Simple Proof is kind of teaming up with the El Salvadoran government. And I'll tell you all about it, as well as Sony Bank. Sony Bank and their stablecoin. And then I'm going to have a little reminder about Sony Bank causing problems a couple of weeks ago with a particular banking lobby group. And then we're going to talk about Genius Group. They've got a little report here about Bitcoin treasuries, and not in the way that you think I'm going to talk about Bitcoin treasuries. I promise. I swear to you. Switzerland has proposed to delay a crypto tax. And then we're going to run on over and talk about Tether, who is shuttering a mining operation. And I don't actually believe it has any damn thing to do with all the Tether FUD that we are having to endure. And of course, strategy will be in the news, as well as a hack on Yearn Finance. And then we're going to finish up with yet another warning about not letting anybody know that you have Bitcoin. And if you do, well, for God's sakes, don't ever let them know where you live. But let's go back up front. The yen carry trade. What the hell am I talking about here? Well, I got this tweet from a guy named Shanaka Anslem Pereira, I think is how you pronounce it. Not exactly sure, but it seems to fit. He's got a tweet here that says, Bitcoin did not crash, it was executed. And I'm pausing there just to say, I don't appreciate the hyperbole as much as nobody else in my audience appreciates the hyperbole, but it's in the tweet, so I got to read it. Continuing, the weapon, Japanese government bonds. On December the 1st, 2025, Japan's 10-year yield hit 1.8777%, the highest since June of 2008. The 2-year bond touched 1%, a level not seen since before Lehman Brothers fell. This triggered the unwinding of the largest arbitrage trade in human history, the yen carry trade. Conservative estimates, $3.4 trillion. That's trillion with a T. Realistic estimates, $20 trillion. For 30 years, the world borrowed free Japanese money to buy everything. Tech stocks, treasuries, Bitcoin. That era ended last month. The transmission was mechanical. Yields rise, yen strengthens, leveraged positions become unprofitable, selling begins, selling triggers margin calls trigger liquidations, and liquidations trigger more selling. October the 10th, $19 billion in crypto positions liquidated in 24 hours, the largest single-day wipeout in digital asset history. November, $3.45 billion fled Bitcoin ETFs. BlackRock's fund lost $2.34 billion, its worst month since inception. And then December 1st, another $646 million was liquidated before lunch. Bitcoin's correlation with the NASDAQ, 46%. With the S&P 500, 42%. The uncorrelated hedge is now a leveraged expression of global liquidity conditions. Yet, the data contains a paradox. While prices collapsed, whales accumulated 375,000 Bitcoin. And miners cut their selling from 23,000 Bitcoin a month to a mere 3,672. Someone is buying what institutions are selling. The pivot point, December the 18th, Bank of Japan policy decision. If they hike and signal more, Bitcoin tests $75,000. If they pause, a short squeeze could reclaim $100,000 within days. This is not about cryptocurrency anymore. This is about the cost of capital in a world that forgot money has a price. The Widowmaker came collecting, position accordingly, read the full deep dive analysis, and he does have a full-scale analysis here called the Liquidity Singularity that he published today, December the 1st, 2025. The link to this very lengthy report will be in the show notes, along with all the stuff that I talk about today. I directly paste all the URLs that I use. I'm not going to read this report because it's not really a report. It's his thoughts on the matter, because it's very, very long. I mean, I could do probably an entire half of a show just reading this one thing. So I'm not going to read it, but I am going to put the URL into the show notes so that you can have it. But going back to his actual tweet, there's a couple of things here that I think are interesting to note. He states that Bitcoin didn't crash, that it was executed because of the yen carry trade. I don't think Bitcoin was executed. I do think, it doesn't make me all happy. I'm not bouncing out the door, going skipping down the street, going la 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 la. I'm not doing any of that shit right now. But I don't think execution is the right word. However, I do believe he's correct about the yen carry trade. Because if you're borrowing cheap ass, damn near free yen, and you're taking it to the foreign exchange and you're cashing it into dollars, or just using the yen directly to buy equities or whatever it is that you're going to buy with it, and you're just going to service that debt because it's sort of like taking out a loan, right? You're kind of borrowing the yen and you're just servicing the interest rate on it. When that interest rate goes way above what you were planning it was going to go above, and you didn't position your risk accordingly, then you have to sell the assets so that you can pay back the yen that you effectively borrowed. And that's exactly what happened the summer before last. That's the last real major ugly ass crash that we've kind of experienced. Well, except for, October the 10th and then what's been going on for the last couple of days. But then he says that whales, while this price has been collapsing, and we're talking about this second tier, the one that started, yesterday. Well, yesterday for me. I guess it was December the 1st for him. I have no idea where this cat lives, so it doesn't matter. But the whales during this particular time have accumulated 375,000 Bitcoin. They bought it on its way down. And miners stopped selling. They cut from 23,000 Bitcoin sold every month, and I guess that's cumulative amongst all the major miners, and they only sold 3,672. Someone is buying what institutions are selling. But the line that I think is the most eloquent here is this one. This is not about cryptocurrency. This is about the cost of capital in a world that forgot money has a price. The yen carry trade has always been, and like this guy says, for 30 years, we've been, investors have been getting in from the Japanese government, servicing the debt load on it because it was damn near free money, and using free money to exercise whatever options they're going to buy. Real estate, they're going to buy art, they're going to buy, equities. And the gains that are made on those assets are more than enough to service the debt load, which was used to actually purchase those items or equities or whatever the hell we're calling them today. And that's been going on for 3 decades. And then the chickens started coming home to roost the summer before last, and it looks like they've returned again as of today. So if you're wondering what the hell's going on, if you've heard conflicting stories about, well, what now? Because there wasn't anything in the news. We didn't bomb Iran. Russia didn't do anything different than they've always been doing. China's basically stable. There's really, other than Trump, quoting Trump, I declare, Venezuelan airspace now closed, end quote. Yeah, that's not enough. There wasn't anything in the news cycle that really said, hey, yeah, that's probably what it was. No, it's the yen carry trade. When you pop up to damn near 2%, which, was coming up from damn near free money, that's going to cause people to sell assets. And they're selling them all over the place. It's, even legacy equity markets are not doing well today. So that's, if you're wondering what the hell, well, that's the hell. Now let's go down south to El Salvador, where they've partnered with Simple Proof to timestamp government documents on the Bitcoin blockchain. Juan Galt has it for Bitcoin Magazine. Simple Proof, the Bitcoin-based document timestamping company, recently announced official partnerships with El Salvador's Ministry of Foreign Affairs and Ministry of Environment to protect government records using the Bitcoin blockchain technology. The announcement was made during the Bitcoin Historico conference at the National Theater in El Salvador, where CEO Carlos Torrielli presented alongside Open Timestamps creator and Bitcoin Core contributor Peter Todd. The collaboration marks El Salvador's continued leadership in applying Bitcoin technology beyond financial application. Both ministries have begun registering official documents on the Bitcoin blockchain, with verified records now publicly accessible through dedicated government portals. Quote, Bitcoin is not just digital money, it's also a clock that no one controls. This allows us to certify with precision the exact moment a document was created, guaranteeing its authenticity and protecting the country's history forever. We're helping ensure that the country's history is preserved intact and can be verified directly on Bitcoin without intermediaries, said Carlos Torriello, CEO of Simple Proof, in a press release shared with Bitcoin Magazine, pausing to say that's incorrect. You do not know the exact moment a document was created. You do know the exact moment that document is referred to on the Bitcoin blockchain. It could have been, I could create a document 5 years ago. Bitcoin has no conception except for when I put that document on, quote unquote, the blockchain. All right. So just be aware that that's an incorrect statement. The company has had multiple successful pilot programs in the past, including one in Screven County, Georgia, in the United States, and another in Guatemala, where it had a direct influence on 2023 elections. This deployment builds on Simple Proof's previous work in El Salvador, where Cubo Plus program graduation certificates became the first public documents in the country registered via Bitcoin blockchain. The Ministry of Environment's timestamp documents, including national reports and public files, are available at blockchain.ambiente.gov.sv. The Ministry of Foreign Affairs verification of institutional reports and records can be found at rree.gov.sv/logros e memorias. Peter Todd, creator of Open Timestamps, the platform and protocol used in part of timestamp critical data on the Bitcoin blockchain, said in a press release, quote, with a single transaction, we can protect millions of documents without congesting the network or altering its monetary function, noting that the system stores only cryptographic hashes rather than the actual documents on Bitcoin. So no, they're not NFTs. All right. So just the full document has not been loaded into the Bitcoin blockchain. It's only the hash, which brings up several other potential problems. How do we know that hash matches the actual document? What was it, the text of the document that was used to generate the cryptographic hash? Or was it a series of photograph pictures of the document where you can read the document and it was the pictures that were used to generate the cryptographic hash. I kind of wish they would detail that out because it's important. You get one thing wrong, like an extra space in text, or you take a picture of the document again, none of the pixels are going to match. You're going to end up with a completely different hash. So this isn't just like take this pill and all your problems are solved kind of issue. But no matter. The project positions El Salvador as a global reference for using blockchain technology in government, information management, strengthening the transparency and public trust of democratic institutions and processes by eliminating the possibility of document tampering. Again, I urge caution when we think about things like this. We really need to know the full parameters of exactly the procedure. I want the exact protocol being used to quote unquote timestamp a document on the blockchain where the only thing that's actually in the transaction is the hash of the document. How did they hash it? When was the document created? How do we know that? What does the document say? How do we know that? How did we get the hash? How do we know that? Exactly what time and in what method was the hash registered on the Bitcoin blockchain? I'm not saying that they're lying. I'm just saying with lack of information, it just always raises the hackles on the back of my neck. But let's just take everybody at their word. This isn't a terrible thing. It's better than bananas on the blockchain, right? If there is a procedure and a protocol that can be extraordinarily verified and then relatively trusted after that, is the verification I'm more concerned about. If we could verify the protocol and how this works and just be able to see examples and examples and examples that all end up with the exact same hash, then I'd actually be pretty happy. And it's not bad. I mean, what happens if your, Hall of Records catches on fire? It's, Library of Alexandria, anybody, kind of thing. Although the Bitcoin blockchain would not have helped the Library of Alexandria because these documents are not full text versions on the Bitcoin blockchain. It's just the hash of what those documents said, and there's no way to actually know from the hash what they said. The only reason the hash is important is that if I hash the same document twice and two different people do it, the hash should be exactly the same. And that way we do know that the contents of that document have in fact never been altered. And that's important. So let's move on to crypto payments coming to PlayStation as Sony plans their stablecoin launch for 2026, Cointelegraph, Helen Parts. Sony Bank, the online lending subsidiary of Sony Financial Group, is reportedly preparing to launch a stablecoin that will enable payments across the Sony ecosystem in the United States. Sony is planning to issue a dollar-peg stablecoin in 2026 and expects it to be used for purchases of PlayStation games, subscriptions, and anime content, targeting U.S. customers who make up roughly 30% of Sony Group's external sales. The stablecoin is expected to work alongside existing payment options such as credit cards, helping reduce fees paid in card networks, the report said. Well, Sony Bank applied in October for a banking license in the United States to establish a stablecoin-focused subsidiary and has partnered with the United States stablecoin issuer Bastion. Sony's venture arm also joined Bastion's $14.6 million raise, which was led by none other than Coinbase Ventures. Sony Bank's stablecoin push in the U.S. comes amid the company's active venture into Web3, with the bank establishing a dedicated Web3 subsidiary in June. Quote, digital assets utilizing blockchain technology are incorporated into a diverse range of services and business models, Sony Bank said in a statement in May. Quote, financial services such as wallets, which store NFTs, which are non-fungible tokens, and cryptocurrency assets and crypto exchange providers are becoming increasingly important, it said. The Web3 unit, later named Block Bloom, aims to build an ecosystem that blends fans, artists, NFTs, digital and physical experiences, and both fiat and digital currencies. Sony Bank's stablecoin initiative follows the recent spin-off of its parent, Sony Financial Group, which was separated from Sony Group and listed on the Tokyo Stock Exchange in September. The move was intended to decouple the financial arm's balance sheet and operations from the broader Sony conglomerate, allowing each to sharpen its own strategic focus. Okay. Do you remember a couple of weeks ago when I brought you this following headline? Community bankers ask the Office of the Comptroller of the Currency in the United States to block Sony's crypto bank ambitions. Remember that? Well, if you don't, the lobby group that is the Independent Community Bankers of America, the ICBA, National Trade Association representing small banks, they asked regulators to block Sony Bank's bid for a national trust charter to issue stablecoins. Well, it looks like Sony's going to do it anyway. The writing is on the wall for these guys. And it's like, and I like small banks. I really do. It is small banks that should be, probably clawing their way into this thing instead of helping larger banks try to stop it while they do their own stablecoin issuance on the other side. This has all ever been about stalling the inevitable because they spent so much time pointing at us and laughing at us that they missed the boat on trying to figure out how to fundamentally understand what was going to definitely eat their lunch. It was just a matter of time when it did, right? Well, it doesn't look like the ICBA has been effective. It looks like Sony's going to do this shit anyway. And even if they don't do it in the United States, Sony has a massive fan base, user base, customer base, right? Sure, United States represents 30% of Sony, well, Sony external sales, but yeah, we're not the only fish in the sea there. So it looks like Sony is going to trudge ahead. And if any of this stuff makes you feel kind of nasty, kind of dirty, go visit my friend SoapMiner over at SoapMiner.com. That's right, it's SoapMiner.com. That's SoapMiner.com where you can get soap. It's all handmade. It's 100% grass-fed beef tallow soap. It's got like the base soap has like 3 ingredients. It's 100% beef-fed or grass-fed beef tallow, distilled water, and lye. And he actually sells that just like it is as his, what does he call it? Rough cut? Yeah, rough cut tallow soap has those 3 ingredients and no more. However, if you want a nice color, if you want, a nicer fragrance, you can buy cedar wood. You can buy pine tar. He actually has a goat's milk tallow bar. He's got lemongrass, orange clove, lavender, tea tree, peppermint, Earl Grey, redacted, which has got carbon in it, which is one of my favorite soaps. He's got body balms. He has deodorants. The man has 2 pages, 2 full pages. Well, not 2 full pages, but he's definitely got 1 full page and a second page of other stuff. He's got a lip balm, for instance, and he takes Bitcoin for it. If you want to buy your soap with Bitcoin, you can do it at SoapMiner.com. That's SoapMiner.com. Make sure you use discount code Bitcoin and you will get a 10% off on your total purchase. That's Bitcoin and use it in the coupon code at SoapMiner.com. Go get yourself clean at SoapMiner.com. Genius Group. How a BTC treasury can help solve humanity's final exam. The hyperbolic nature of some of these things. But Genius Group's got a couple of good points. Terrible headline aside from CoinDesk. We'll just get into it here. It occurs very slowly and then all at once. American architect, inventor, and futurist Buckminster Fuller once described the modern era of humanity as the final exam. To Fuller, this exam is not like the graded coursework that one would experience at a university, but instead a critical period in human existence, where we will inevitably choose to exist in a utopia or cease to exist entirely. Though no letter grade exists within the final exam, well, you get a D, death, I guess. Fuller did detail a clear path toward passing into utopia, abandon technological selfishness for the collective use of technology to provide for everyone. In 2008, a few decades after Fuller's passing, Satoshi Nakamoto detailed the economic manifestation of this same test as a neutral, mathematically enforced coordination layer. Bitcoin allows for the trustless collaboration of humanity at infinite scale. Open sourced and untethered to the central banks and nation states that control fiat currency, Bitcoin presented an opportunity for humanity to truly play through Fuller's world game and lead to a solution to pass the final exam. At around the same time, social entrepreneur and futurist Roger James Hamilton was hard at work developing a solution to the final exam through the creation of the wealth dynamics system. Over the course of 2 decades, Hamilton's fundamental positioning as a futurist and coexistence with Bitcoin has culminated into Genius Group, a Bitcoin-first education collective powered by AI. And, oh my God, it's listed on the New York Stock Exchange. Okay. Genius Group's mission is as unapologetically expansive as it needs to be to successfully pass Fuller's test, provide today's organizations, students, and entrepreneurs the necessary tools to coexist in the modern economy through the marriage of AI tools and an open monetary standard. Through organized, continuous learning communities, Hamilton's Genius Group is maximizing abundance to further collaboration. One of Genius Group's core principles is education, and Genius U provides both a marketplace and real-world environment for educational communities that reward value creation and borderless exchange of information in the modern age. Just as AI breaks down barriers to entry usually required to for an entrepreneur, it also creates an abundance of information needed to progress through the world game. Today, Genius Group serves 5.8 million users in over 100 countries through its Genius City model and online digital marketplace of AI training, tools, and talent. Genius Cities, which act as global campuses for innovation, are on the rise. Earlier this month, Genius Group opened up their flagship Genius City Bali, marked by the inaugural Genius Future Summit held October the 2nd and 3rd. Genius Cities have opened up in Singapore and Dubai, with additional plans to further globalize the Genius City movement in the near future. With personalized entrepreneurial AI pathways and an active community, Genius Group is combining human ingenuity and AI solutions to establish an educational foundation for the next generation of humanity. As a Bitcoin-first education company, Genius Group isn't limited in its goals to what it can offer others. Through a core belief that Bitcoin is an integral tool to work through the world game, Genius Group is also able to directly contribute alongside its community by establishing itself as a Bitcoin treasury company. Yay! During the Bitcoin Investor Day event at Paris Blockchain Week, Hamilton said that establishing Genius Group as a Bitcoin treasury company is a shift from competition to collaboration. In making efforts to purchase BTC, Genius Group is not only supporting other treasury companies, but also joining the coalition of many that view Bitcoin as a transparent value distribution system of universal consensus. As a sponsor of CoinDesk's Bitcoin Treasury Month, Genius Group is stepping up to be a visible proponent of Bitcoin and the future of humanity in a post-final exam society. As technology advances, so does the opportunity to abandon technological selfishness for the collective use of technology to provide for everyone, first slowly and then all at once. At no point does anybody say what the hell technological selfishness is. Are they going to use the term late stage capitalism that I've heard bandied about like for the last several well, at least a couple of years anyway. Is it something else? They never actually explain what the hell technological selfishness is. Although I presume they're talking about private companies building technology like OpenAI and not giving it away for free. That's technological selfishness. And somewhere in here, they also mentioned something about, intellectual property. Guys, why would I write a book if I wasn't able to get the money from it? Why would I come up with something if I wasn't able to get paid for it? I don't understand the vehemence of the hatred of intellectual property, because guess what? Without it, you're going to have far less innovation. Now, does that mean that I'm a big fan of Elon Musk? No. I mean, at one point or another, there's only so many yachts you can ski behind, but that's not up to me to tell somebody else what that number of yachts is. I can't go to Saylor and say, dude, you got 3 yachts. You know what? 2's fine. You're going to have to sell your 3rd. A, he's going to laugh at me. B, where do I come up with this number? It's like there was a famous United States Supreme Court case on Larry Flynt. And if you don't know who Larry Flynt is, I advise you to watch the movie People versus Larry Flynt. It's got Woody Harrelson as playing Larry Flynt. Larry Flynt is the guy behind Hustler magazine. And there's a difference between nudie magazines. Playboy and Penthouse are sort of like upscale, more classy. I don't know. I haven't seen one in years. I've heard that the quality is degraded in Playboy since Homeboy, the owner, died, Hugh Hefner, since he died. But I don't know. I haven't seen anything like that in decades. But the way that it used to be was this. Penthouse and Playboy were high class, upscale, very tastefully done, nudie pictures of women. And then you had Hustler. Hustler was not classy. Hustler was like redneck, definitely did not paint women in a good light at all. It was harsh, and it still is. It was, I mean, people say, oh, well, Playboy's pornography. Nah. But here's the deal. In a couple of cases, or at least one case of Larry Flynt that was taken to the Supreme Court, one of the Supreme Court justices was, the question that was put to the Supreme Court was, how do you define pornography? And the answer from this judge was, I don't know how to define pornography, but I know it when I see it. And that's sort of where I'm at with, hey, you got 3 yachts. Maybe that's too many yachts. Hey, you got 15 houses. Maybe that's too many houses, especially if you're not renting them out. If you're not using them as like an investment to, make actual cash on a month-over-month basis. If you're just using it for storage of wealth, you're not renting them out. You see them maybe once every one of them once every 10 years. Yeah, it's probably a little bit excessive. But again, there's 2 things here. Not only is it me saying, I don't know what too rich is, but I know it when I see it. And second is, who am I to call those shots? I'm not anybody. I can't call those shots. I would hope at one point or another, some of these people would go, oh, you know what? Maybe I'm done. Maybe I can just go enjoy my life. But humans are going to human. And while I appreciate what Genius Group is doing here, I think we need to stop being as naive as we have allowed ourselves to become. We've been apathetic forever, but it seems like Bitcoiners, like we started being apathetic, and then we came into full knowledge. But over the last 3 or 4, maybe 5 years, we've become a little bit more naive than I think is credible. And I think we need to stop doing that shit right now. You know what? Let's run the numbers. CNBC futures and commodities. Well, at least all things are normal in energy land, where Brent North Sea is up 1.12% to 63.08 a barrel. West Texas Intermediate up even more, 1.16% to 59.22. Natural gas is acting as a hedge, so all things are right with the world in energy. It's down a half point to 482, so it's still pretty damn high. I guess we're going to have a mighty cold winter this year. Gasoline is up 2.5 points, getting ready for Christmas driving. $1.86 a gallon. And Murban crude, everybody's favorite light sweet crude, is up 1.25 to 65.07. Metal futures are mixed. Palladium is down 1.7%, but gold is up a third to $42.70 and 2 dimes. It's pushing against its all-time high. Platinum is down a third. Silver is up 3.37. It's almost to $60 an ounce, y'all. $60 an ounce on silver. Copper is up 0.56% at this time. Ag is mostly in the red today. The biggest winner is chocolate, 0.76% to the upside. Biggest loser today is sugar, 3 full points to the downside. Live cattle down 1.1. Lean hogs basically moving sideways, and feeder cattle down 1 full point. S&P is down 0.17. NASDAQ is down 0.09. The Dow is down a third, and the S&P Mini is actually up today, not much, 0.05%. And then you got Bitcoin, which is knocking on $85,370. That's a $1.7 trillion market cap, and we can only purchase 20.1 ounces of shiny metal rocks with our 1 Bitcoin, of which there are 19,956,138.66 of, and average fees per block are low, 0.02 BTC, taken in fees on a per block basis. However, at the moment, fees are pretty high, well, relatively. There's about 27 blocks carrying 55,000 unconfirmed transactions waiting to clear at high priority rates of 7 sats per VByte. Low priority is going to get you in at 5. And mining, or have we lost? No, we have not lost zettahash range. We are at 1.08 zettahashes per second in hash rate on the Bitcoin blockchain. That's more security than you'll ever need and more. From Lone Star Bitcoin, which was Wednesday's episode of Bitcoin, and I apologize because I didn't come to you Friday. I really thought I was going to be able to pull that off, but man, tryptophan is one hell of a drug, dude. And you eat like anything, like any turkey leftovers, and your whole day is pretty much shot. I'm just telling you. So I didn't come to you on Friday. And again, my apologies. But Oak Grove with 100 sats says, for what it's worth, with Spain, the socialist opening salvo in that war was to butcher half of the priests and nuns in all the churches there. Take that for what it is. Yeah, the whole Spanish Revolution thing, or Civil War, whatever the hell it was called, the Franco fracas, is, I've heard that used before. Bad deal all the way around. Very, very bad deal. Spitball Marksman, wow, 10,000 sats, bro, thank you. He says, Thanksgiving sats and stuffing, it's a transition round here. I get what you did. Oak Grove with 1262 from episode 1219 says the IMF, that is explained in the book, how they would enforce that. Texas is one step closer to being its own country again. With Sam Altman, remember that Skynet registered the DNA of all captured humans as part of intake. So ask yourself, am I making Skynet's job easier? I think the answer to that, Oak Grove, is yes. I think we all are. We're trying not to, but we're being corralled, man. We're being corralled just like fucking cattle. Nick Dose with a row of sticks, 111 says cheers. Nostr Gang with 102 says happy Thanksgiving. Happy Thanksgiving to yourself, bro. Sat Cummins, 5,000 sats, bro. Thank you. Says, I love this show. Well, I love you, Sats Cummins and Pies. 121. Thank you, sir. No, thank you. And then Here and Gone says, I hope that all the companies and people who rejected Bitcoin when it started dipping, because that seems like the trend here, get just as rejected when it starts mooning again and breaks off the legacy system. We need a Jack Mallers versus Jamie Dimon celebrity death match. That would be pretty funny. I gotta admit, that would be pretty fun to watch. All right, that's the weather report. Welcome to part 2 of the news that you can use. Tether is going to shutter their Uruguay Bitcoin mining operation. Matt DeSalvo from Decrypt is going to tell us all about it. And it says stablecoin issuer Tether is halting its Bitcoin mining operations in Uruguay. The firm, which issues Tether, the third largest cryptocurrency by market capitalization, said it made the decision to leave the South American country due to high energy costs. Local media reported that El Salvador-based Tether had confirmed to Uruguay's Minister of Labor and Social Security that it was laying off 30 of its 38 employees inside the country. The firm also confirmed the exit to Cointelegraph. And of course, all questions for Tether went unanswered. Back in September, local media reported that Tether, which in October reported $10 billion in profit for the first 3 quarters of 2025, was in dispute with Uruguay's government-owned power company UTE over a $5 million debt. Tether issues USDT, the most traded digital coin in the crypto world, and the third largest digital asset with a $184.4 billion market cap. The token is dubbed a digital dollar. Yeah. We get that. Let's get back to this one. But Tether also wants to be the world's biggest Bitcoin miner, according to Paolo Ardoino, the CEO. And South American countries have been eyed up by Bitcoin miners due to their cheap energy. Now, the crypto mining industry requires huge data centers full of expensive computers, yada, yada, yada. Tether is making further inroads into Latin America after relocating to Bitcoin-friendly El Salvador back in January. The company bought a majority stake in South American agricultural firm Adeco Agro in March, and I brought you that news here on the Bitcoin and podcast. So there seems to be some dispute as to why Tether is leaving Uruguay and the mining operation there. And it seems to be that Tether's saying that energy prices are just too damn high, and Uruguay seems to be saying that Tether owes them $5 million. Who knows who's right? What's important here is all the FUD surrounding Tether that we're seeing, and it's going to get worse, right? So let's before I talk about that, the FUD that's going to come out is that Tether is dying. Of course, that's already out, but this is going to be a concrete example that people like Peter Schiff will hold up and say, here's proof that Tether is dying. They can't even keep their mining operation alive, or they can't afford to pay a $5 million debt, or they can't afford high energy prices. Pick your flavor, dude. The lollipop has the same amount of sugar depending on whether it's chocolate, vanilla, or, I don't know, cherry. It's going to be used against Tether, which nobody really cares about Tether itself. Right now, the people that hate Bitcoin have a full-blown open highway into FUD. Between Tether, between the price action that we've seen, we're down like 40%, or it's either somewhere between 35 and 40% from all-time highs. You and I have been here before. However, these guys don't. Even the guys that are doing the FUD, they've been here before. But they look at it as like, oh, it's the combination lock. This combination always works. All we have to do is wait a while. Bitcoin's price falls 35%. We already got a couple of scapegoats that we keep in our back pocket, and we're gonna not only scapegoats, but more problems. And Tether is being touted as this major problem. Right now, it's really hard for me to get on Twitter and look around, which is why I stay on Nostr most of the time, but it's really hard to look on Twitter because all I see is all these people with all these numbers saying, here's how Tether is going to die. And of course, as always, it's going to take Bitcoin with it. And we've been here since the Twitter account called Bitfinex, ED at the very end, like Bitfinex, and then ED. Because this guy was against Tether ever since the beginning. Swore up and down that the only reason Bitcoin's price, and we're talking back when it was like $17,000 a coin, Bitfinex was yelling at the top of his lungs that it was all because Tether, and that Tether was going to fail and it was going to take Bitcoin to zero. We've heard it all before. Everything that we're seeing today and all the things that we've seen in this decline from $126,000, $127,000 is exactly the same shit in the exact same order that we've seen every other 35% fucking drop. And I've seen like 12 of them. This is nothing new. And yet here we are again with the media, poised, perfectly poised, as they have been on several occasions before, to put the nail in the coffin of Bitcoin once and for all. And as usual, it's not going to happen. It just boggles the mind that we're still here. Whatever. Let's move on to strategy. Guess what? They bought more Bitcoin. Now. They actually, I think what they did is they just wanted to buy enough Bitcoin to hit a particular number. So they bought 130 Bitcoin for $11.7 million, and their total holdings hit exactly 650,000 BTC. But here's the real news. They've established a $1.44 billion dividend reserve in cash, not in Bitcoin, but in USD. Let's read why, because this is another end of the FUD. This we've been hearing about is strategy, and it's going to be Tether, and God only knows who else they pulled out of their hat. But the Block and James Hunt has the whole story. Bitcoin Treasury Company Strategy acquired an additional 130 Bitcoin for $11.7 million at an average price of $89,960 per Bitcoin between November 17th and November 30th, according to an 8K filing. Strategy now holds 650,000 BTC for an average price per coin of $74,436. The latest acquisitions were made using proceeds from at-the-market sales of its Class A common stock MSTR. So they diluted their shareholders again. But according to Saylor, as long as their MNAV is above the number 1, it's not really dilution to print up more shares and sell them. I disagree, but I'm not a billionaire either like he is, and he's got the 3 yachts that I keep bitching about, and I don't, so there you go. Take whatever it is that I say with a grain of salt. But during the last 2 weeks, Strategy sold 8.2 million MSTR shares for $1.48 billion. And as of November the 30th, $13.37 billion worth of MSTR shares remain available for issuance and sale under that program. No shares of its various perpetual preferred stocks were sold in the period, with a collective $30.2 billion remaining under those ATM programs. Listen up. Additionally, Strategy announced a United States dollar reserve of $1.44 billion to support the payment of dividends on its preferred stocks and the interest on its existing debt funded by the MSTR at the market sales. Quote, Strategy's current intention is to maintain a USD reserve in an amount sufficient to fund at least 12 months of dividends, and Strategy intends to strengthen the USD reserve over time, with the goal of ultimately covering 24 months or more of its dividends. The maintenance of the USD reserve, as well as its terms and amount, remains subject to Strategy's sole and absolute discretion, and Strategy may adjust the USD reserve from time to time based on market conditions, liquidity needs, and other factors. Okay, so they say that they're going to use it just to pay dividends, and then they say, well, given other factors, we may use it for liquidity. What does that mean? Make payroll and pay bills and pay vendors, liquidity. So again, let's be careful and not get too naive. Let me finish up first though. Last Monday, Strategy appeared to have paused its weekly Bitcoin acquisitions after failing to announce any new buys, with its total holdings remaining at 649,870 BTC. However, given the November 17th to November 30th date range in Monday's filing, it's unclear exactly when the latest acquisitions were made. That followed what Saylor described as a big week, the week prior, announcing the purchase of another 8,178 BTC for $835.6 million. Instead of his usual acquisition hints, Saylor posted an update on Strategy's Bitcoin tracker on Sunday stating, "What if we start adding green dots?" Likely referring to the new $1.44 billion or US dollar reserve for dividends and interest payments. Quote, "Establishing a USD reserve to complement our BTC reserve marks the next step in our evolution, and we believe it will better position us to navigate short-term market volatility while delivering on our vision of being the world's leading issuer of digital credit," Saylor said on Monday. Okay, let's see if there's anything of note here. Yeah. Earlier in November, Saylor also struck a defiant tone, pushing back against the idea that it may be removed from MSCI indices amid the stock sell-off. JP Morgan analysts had warned that Strategy could see billions of dollars leave its stock if MSCI removed it from major equity indices. Strategy is currently included in indices such as the NASDAQ 100, MSCI USA, and MSCI World, effectively allowing Bitcoin exposure to seep into both retail and institutional portfolios via passive investments. And then they talk about JP Morgan going on the warpath, which I already covered, I believe, on Wednesday. But here's the thing with it. The reason I'm bringing you the Saylor news is this. It's not that he bought more Bitcoin. What he bought was a pittance. No. It's this treasury reserve. But it's not even that. It's the timing of the creation and the announcement of the $1.44 billion US dollar reserve to protect future dividends for a 12-month period. What happened yesterday? Does anybody remember? Yeah, there was a podcast that had Phong Le, the current CEO of Strategy, on as a guest. And you know what he did? That dipshit unzipped his fly and said it's possible under certain circumstances that we could sell some Bitcoin. And then you see the rip into the red on the downside price action for Bitcoin. Even though I've already talked about it being the Japanese yen and the carry trade thing being part of it, this did not help. This was adding fuel to a fire that was already burning. So here's my question. We didn't know a damn thing about this $1.44 billion USD fund to protect dividends until after news broke that Phong Le has stated, quote unquote, this is the media, quote unquote, "By God, Strategy is going to sell their Bitcoin. Phong Le said so." A, he didn't say so. B, he gave a couple of conditions under which they might sell some. And C, that was a bad move. What would it take to get somebody to go on a podcast and shut the fuck up about something like that? Because that was in clear contradiction to what Michael Saylor has always said, right? You got two leaders of a company. When Michael Saylor was CEO and now as chairman of Strategy, he said the same thing in both while he was occupying both of those seats. We will never sell Bitcoin. He said it multiple times a year, a couple of times a month. He was always asked, well, under what conditions would you sell Bitcoin? His answer was always, we're not. We'll come up with the money in some other way, but we're not selling our Bitcoin. And he did that for 5 years. Until yesterday when Phong Le decides, as CEO of Strategy, to go on a Bitcoin podcast and say, well, under certain circumstances, we might sell some Bitcoin. That's not leadership, or rather, it's not coherent leadership. And I don't know what should scare investors more. The fact that Fong Li said what he said, or the fact that the two main guys that are calling the shots at strategy don't seem to be reading from the same playbook. That, to me, is actually more scary than what either one of these jokers actually say. The fact that they're saying a different thing is my problem. Does that mean that I'm going to sell all my strategy stock? No, because I don't own any. I never bought any. I never wanted it because all I really want to do is just have more Bitcoin. And I'm not going to be able to do that by buying strategy stock. It doesn't work that way. And people who think that you're getting exposure to price action and nothing more to Bitcoin when you buy any of this shit. Any stock for a treasury company. If you want to get price exposure to Bitcoin, you just buy Bitcoin. It is really that simple. And I don't understand it. But going back to this incoherent speech between these two individuals, can I just say, please, Michael Saylor and Fong Li, would you do me a favor? Sit down, have a nice glass of whiskey each. Neat. No ice. Room temp, the way whiskey was supposed to be served. And finally figure out what page of the playbook you're on. Because you don't seem to be either reading the same playbook, and if you are not on the same page. Get your ass on the same page. And then we can talk about Yearn. Oh, thank God. We can talk about something fun. Yearn Finance YETH suffers a major hack. Attackers send $3 million worth of ETH to Tornado Cash. This is out of Yahoo Finance because nobody else is writing about this in the crypto world or the Bitcoin world. Like all the magazines that I normally see, I scavenged all of them. I'm sure there's stories now, but this morning when I was putting the show together, nobody was saying nothing about Yearn. And this shit happened last night. Before I went to bed, I read about this crap. Anyway, DeFi platform Yearn Finance's YETH product was hit by an unlimited minting of tokens on Monday, draining the entire YETH pool in a single transaction. I've warned everybody as much as I can about DeFi. Stop. God, it's like, how hard is this? How hard is this? You know why I don't worry about any of this? Because I don't play with any of this crap. I never have to worry about waking up to news like this. Ever. I've never had to. And I never, ever will. But according to blockchain data, the exploit generated a near infinite number of YETH, draining millions from balancer pools. Attackers roughly profited 1,000 ETH worth $3 million, which was routed through the Tornado Cash mixer, according to Chinese journalist Colin Wu. YETH is an index token consisting of several different liquid staked versions of ETH. In other terms, Ethereum liquid staking derivatives. Because everybody needs a derivative. Everybody needs a casino version of a real thing. Oil derivatives is a casino version of oil. All right, so if you hear the word derivative, you might as well just spell it casino, because that's what it is. It's not price discovery. It is worthless gambling bullshit, and you need to stay as far away from it as you possibly can, because otherwise you're going to end up with stories like this. The incident apparently involves several newly deployed smart contracts, which then self-destructed after the transaction. The total financial losses remain unclear. However, the YETH pool had a total value of around $11 million prior to the attack. Following the exploit, mixed reactions came from the community, with some expressing concern over the continued use of outdated contracts. Besides, Yearn Finance suffered a hack in 2021, affecting its YDAI vault and losing $11 million in value back then. The hacker apparently got away with $2.8 million at that time, and later that protocol flagged a faulty script in December 2023, wiping out 63% of a position in its treasury. And people are they're still going to go use this thing. Even after all of this. They've been this, we're talking about hacks back to 2023, dude. Stay away from this stuff. Please, for the love of God, stay away from it. And then, finally, the word of warning, and I'm not going to read this story, and you'll figure out why very quickly with the headline. By the way, just to let you know, it's from Bitcoin News, and it's written by Nima. British Columbia family tortured, sexually assaulted in a $1.6 million Bitcoin theft. So some people broke into a family's home in British Columbia, tied up the mother, the father, and their daughter. I'm not going to get into it. It does not look like the two women were raped, but they were sexually, or at least one of them was sexually assaulted. And I'm not going to read the story because I don't want to trigger anybody this early in the week, this early in the day. Please stop wearing swag. Stop telling people how much Bitcoin you have. Or even if you're a shitcoiner, I don't care, man. I don't want you dying either. Don't tell people how much ETH you have. Don't tell people how much DAI you have. Just don't tell anybody anything. In fact, you should probably not tell how much people how much gold you have. You should probably not tell people how much you make. You probably shouldn't tell people how much you have in your bank account. You probably shouldn't do any of that. Right? So stop. But especially when it comes to Bitcoin, because these wrench attacks are on the rise. These guys actually got away with $1.6 million. They initially wanted 200 Bitcoin from the guy. The dude said he didn't have that much Bitcoin. They lowered their price to 100 Bitcoin. Bad shit started happening when he said he couldn't pay that either. And then he ended up, I think, giving him like 20 Bitcoin or something like that. It doesn't really matter. They broke into his home. They were disguised, weren't they? They were waterboarded. That's part of the torture that happened. They were waterboarded. And by the way, this was done by two men dressed as Canada Post workers. I guess that's like the postal service in Canada. So a couple of mailmen here in the United States knocks on your door. You open it. Why? I don't know. Look through the peephole. If you see the mailman knocking on your door and there's two of them, you might want to ask yourself why, because in the United States, typically I've only ever seen one male person unless there was two and they were being trained. But I'm just saying, it just seems odd, right? Mailmen, they don't really knock on your door to deliver the package. They just leave the package on your doorstep. But generally they don't even do that, man. I mean, like, unless it's like in a U.S. Postal Service thing, right? It's very rare. If it doesn't fit in the mailbox, you kind of don't worry about it. But they certainly don't knock on your goddamn door. So the guy opens the door, they push their way in. They just push their way in. And then all hell breaks loose. Over $1.6 million, which is a lot of money. I get that, but still, is it worth your family? Just please. And I know there's some of you out there that may be listening to the show that are saying, dude, I make my money selling Bitcoin shirts. I get it. I do. If you want to buy a Bitcoin shirt, then by all means, buy one. Just don't wear it in public. Right? Don't wear it in public. I know that sounds stupid. Why would I buy a shirt if I'm not going to wear it? In this case, support your local Bitcoin vendors who make Bitcoin shirts by buying one of their Bitcoin shirts, but don't wear it in public. That goes for socks, for pants, for suit jackets and ties and hats and glasses and rings and bling and all kinds of shit is being made that has the great big ass Bitcoin symbol on it. And almost everybody knows what that symbol means now. It didn't used to be that way, but we've been effective in marketing at least to that point, to the point that if you wear it in public, you are a target. This guy This guy, let's see. Hold on for a sec, because there was something in this. Maybe it's in the last paragraph. Oh, Well, somewhere in here, it stated that the guy was basically bragging about how much Bitcoin he had in public to other people. And that's why, in that case, he wasn't wearing bling. He was just opening his great big ass mouth. Don't do that. Please don't do that. I've seen some really good Bitcoiners make the mistake of saying how much Bitcoin they had on a podcast. And once you say it, you can never take it back. Don't do that. I want to see you safely, and I want to see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.